Massive AI-related job cuts and corporate earnings results caused big swings in stock prices, but the broader market ended just a little higher. It was gains in tech and industrial stocks that offset losses in the consumer sector. And by the end of the week, the All Ords and the ASX 200 index added 0.33% each. Looking at the top movers, and Coles fell over 7% on account of its half-year result. Virgin Australia announced a 28% drop in its half-year profit to $341 million as a result of its tax bill. Its shares were flat. The standout, though, was the owner of Afterpay, Block. It plans to lay off 40% of its global workforce, or more than 4,000 employees, with founder Jack Dorsey saying artificial intelligence tools have changed what it means to build and run a company. Earlier in the week, logistics software company WiseTech said it would sack almost 2,000 workers, or 30% of its workforce, while the Commonwealth Bank said hundreds of roles will go. Block shares surged about 30% in the US and here in Australia. For the week, the share market hit fresh records, gaining well over 1% for the ASX 200 and the All Ords. On Friday, the Australian dollar was holding above 71 US cents. Well, let's go to that corporate news now, and shares in Coles and its profit headed down in line with its campaign jingle after the supermarket chain posted a weaker first half profit, weighed down by court-ordered penalties. Net profit after tax fell 11% to $511 million in the period. The result was hit by significant items of around $230 million following a federal court judgment in September last year, which found the grocer had underpaid workers. Group sales revenue, though, rose 2.5%, with e-commerce sales jumping 27%. Coles declared an interim dividend of 41 cents a share. Macquarie Technology Group has recorded its 22nd straight half of yearly growth of EBITDA. On a statutory basis, though, profit fell 9% to $16 million and revenue rose 5%. I spoke with Macquarie Technology CEO David Tudehope. He says AI will reshape the economy. David Tudehope, thank you for making the time to talk to me.
Thank you, Alicia.
You've just released your half-year results. Now, revenue was up 5%, but the statutory profit dipped a little. What was behind the result?
Yeah, look, we're really proud of these results. 22 consecutive halves of profit growth at the EBITDA level. What we're seeing, though, at the profit after tax level is we're paying tax, we're spending more money on capital investment, which flows through to depreciation. That does flow through to the net profit after tax.
You're on your way to building your 6th data centre. How hard is it to build these types of capital-intensive projects in Australia?
I think the environment is broadly supportive. People recognise that this is an opportunity for Australia to benefit from the growth of AI. Data centres are important. Also, if the AI and the data is kept in Australia, subject to Australian law, Australian regulation, that's a good thing. Australian privacy principles apply. So there's many good reasons to make sure that AI models and cloud is kept in Australia. And from that point of view, I think that broadly state government, federal government are supportive, but there's still plenty of challenges in any big project.
This week, Andrew Charlton, the Assistant Technology Minister, was talking about the need for Australia to have onshore AI capabilities and a pro-Australian approach. Is that something that resonates with you?
Oh, look, I think it's fantastic that Andrew Charlton's embraced this very important initiative, as is Tim Ayres. There's a fantastic opportunity for Australia to play a part in this. I just completely disagree with some people's views that Australia's missed the opportunity to participate in AI. We want to create jobs, we want to create investment in this space. I mean, this is without question the future, and having that future in Australia rather than just being consumers of that service. We don't want a situation where we just simply rely upon salespeople for US tech companies being the only jobs in Australia.
Well, in the US, Donald Trump says that data centre operators should have their own power plants on site. NextDC CEO Craig Scroggie has said that's not a practical option in Australia. Do you agree?
I agree. It's not a practical option in Australia, and I think it would be a sad day if we started taking policy cues from the US.
Your company was once called Macquarie Telecom. It has shifted with the technological changes in the economy, now Macquarie Technology. Given that you've seen all of these shifts, how do you think AI is going to change the economy?
AI is super important for the economy. I mean, we're seeing lots of places, we're the picks and pans for the miners, we're the people that enable these AI models, both at a AI model level as well as the corporate customers, business customers, government customers trying to use them. So we've got a good insight both into what the infrastructure is that you need for this, but also, and equally importantly, the security you need across it. Because one of the exciting elements about AI is that incredibly benefits of productivity, but you need to make sure the data is secure. And this is not just citizen data, but also corporate data, government data. How do you make sure that what data goes into the AI model is the kind of data you'd be happy to, if it was to be published on the web one day, you wouldn't be uncomfortable about that. But then you want to utilise the benefits of the model. So how do you strike that balance? And there's lots of really good, smart things you can do to strike that balance.
Is the government doing enough to regulate in this space, or do you think big offshore AI companies have the ear of the government?
I think it's so important we do embrace the AI change. I mean, for me, I've been in the industry for a long time. In my mind, this is as big as the internet in 1998. This will change everyone's lives, and we don't want a situation where we think, oh, well, the internet's going to be create risk, which of course it did, and we've seen how that played out and regulation caught up. But equally with AI, we don't want people to hold back embracing it, but we do need government to create some guardrails, and I accept that's and every country is dealing with this. I would say the European Union has probably put more thought into this than probably any other part of the world, and they've put a lot of time into trying to balance the safeguards, but I think the Australian government also has. I mean, without question, some of our work has led the world in terms of children's safety in this space. For business customers, though, there's a different perspective, related but different. It's how can we embrace this in the workplace? How can we take that really important corporate data that we've been growing and nurturing for many, many years and leverage AI to gain new insights out of it, to automate what we do to make ourselves more productive? And that, I think, is where the game is for business right now.
When it comes to jobs, this week we've seen the logistics software company WiseTech and US company Block announce thousands of job losses. CBA has also announced a few hundred. Are you expecting to see more of that?
What we're seeing is that software creation is becoming so much more efficient with AI. And that's a good thing. I mean, nobody wants to take longer to create software than they used to before. And that's been a continual progression over time. There's been lots of innovations over the last decade or so, but this is accelerated with AI. And this is a good thing. I mean, no one actually wants to cut boring lines and lines of code, copy and pasting things from libraries. If you have an alternative, why wouldn't you embrace it? But equally, when it comes to the next phase of software development is checking the code to make sure it's accurate. And we all have seen that where software codes get released and the software doesn't work straight away. I mean, imagine a situation which AI can do of testing the code quality and then deploying it, making sure that when you deploy it, if there's a problem, it can revert back out again, and having all that automated through AI, game changer. So I think that's the opportunity for businesses. And how that plays out could be more productivity, so your company can move faster, can evolve and create more products faster. It could be far more productive in terms of its ambitions, but also can mean I need less people to do the same thing. But I think we'll have different responses. I don't think what you've seen today, the headlines of the last week, is what I'm seeing across corporate Australia. I understand they're headlines that naturally attract people's attention, but I'm seeing more of is people saying, right, well, how can we move faster with product creation and how can we do more?
Back to your company, can you give us an outlook for the full year? What do you expect to drive growth?
Yeah, look, we're executing to our plan. I mean, we are really proud of our profit track record. We are very focused on making sure that our profitable growth continues going forward. We've got lots of really well-known plans around the data centre business and expanding that. We've also got a fantastic customer service record that we're really proud of that underpins everything we do, and that will be a big part of the next year. But the final part is there's some really exciting things we're looking at in the world of cloud services and government, helping the things we just spoke about around helping businesses and government and defence supply chain use AI in their businesses, but in a way that's secure. and protecting the data. That is the part that we think is a big opportunity, and we're still in the planning part of that, but we're well advanced.
David Tudehope, thank you so much for your time.
Thank you, Alicia.
Qantas is overhauling its frequent flyer program, investing in new planes and promising competitive airfares. The airline says it's facing growing costs at its airports as it announced a $925 million half-year profit.
Hello, how are you all?
A premium result that comes with a new destination.
Are you excited about Las Vegas?
The Qantas boss hyping up her team as the airline announces a bumper profit.
Australians' appetite for travel continues to be incredibly strong. We're seeing this across leisure and business purpose travel.
But behind the good news lay some concerns.
We are seeing security, navigation costs and airport costs growing at double inflation. That is an industry issue that will put pressure on fares.
Qantas posted a $925 million profit, up slightly on the same period last year. More than 15 million people flew with the airline, while nearly 13 million travelled with Jetstar. 9 new planes were delivered to the group, as Qantas spent $1.8 billion on renewing its fleet, with billions more earmarked.
Around 60% of Jetstar's increase in profitability was driven by these next-generation aircraft.
One of the major announcements by CEO Vanessa Hudson was to Qantas's frequent flyer program, making it easier to move between tiers by allowing members to roll over unused status points as well as earn them through everyday shopping.
They're trying to drive the loyalty side of it as well as making profits. So loyalty means trying to keep passengers away from Virgin.
As competition heats up.
I am actually pretty loyal to Qantas.
Probably not as loyal to Qantas as I once was.
That's something the flying kangaroo is trying to win back.
The corporate regulator is taking legal action over allegations Budget Direct customers were overcharged. The court action is against Auto & General, the underwriter for Budget Direct. ASIC alleges tens of thousands of consumers lost more than $3 million between March 2020 and July 2024 because of the company's misconduct. ASIC says the case highlights its focus on guarding against misleading pricing practices in the insurance sector. Netflix has given up on its bid to buy Warner Brothers Discovery. The move clears the way for Paramount Skydance to win the months-long battle for the Hollywood studio. Warner Brothers put itself up for sale last year. It says Paramount's latest bid was superior to the one from Netflix, which has now refused to raise its offer. Netflix executives say they won't match the Paramount Skydance bid because they don't believe the deal is financially attractive at a higher price. And that is finance for now.